Utilizing the candlestick charts allows an investor to see exactly what's happening as far as what a price move might be doing. We saw a left-right combo, a bear or a doji followed by a bearish engulfing signal in the Dow last week. And it closed below the T-line, which implied there was going to be some more selling. The magnitude of the selling is not always foreseen, but the probabilities of more selling told us that we should be closing out long positions and maybe possibly going short going into the close of this day. However, after the big down day, they started bouncing back up, which was still an implication that the uptrend was in progress, but it would not be confirmed until we saw a close back up above the T-line. As we saw in the Dow, it didn't get above the T-line, which meant there was probably more selling. Again, it opened down here and traded lower today. But as we can see, by the end of the day, the bulls had taken control and brought the Dow forming a bullish engulfing signal with stochastics getting toward the oversold area and a close right on the T-line. This makes the analysis very simple tomorrow. If they open positive and start trading positive, the reversal probably has occurred. The same can be illustrated in the NASDAQ. It opened lower, but almost very quickly it started trading above where it opened. That creates a green candle, which to the candlestick investor, that immediately illustrates that there's buying going on. Even though the market is lower, the index is lower, there's buying going on after the open. That gives you a much quicker evaluation of what your positions should be doing as to whether they should be closed out or maintain long positions. And then tomorrow, with the close above the T-line, both in the NASDAQ and the S&P 500, it becomes a very simple process. If they open positive and start trading positive tomorrow, we can see the J-hook pattern in progress, probably maintaining or expecting another major leg to the upside. And price trends move based upon investor sentiment. And that's usually influenced by stocks that everybody's familiar with. Notice that Microsoft gapped up today after earnings and has an all-time high. Amazon was able to close above the T-line right before their earnings report. They're up 200 some odd points, well up off the chart right now. So that information will influence investor sentiment, because now everybody's thinking the earnings of these stocks are still strong, the economy's still strong, they're still going to be in a buying mood. Remember, prices don't move based upon fundamentals. Prices move based upon the perception of fundamentals, and that's going to be these big stocks trading up big is putting a lot more confidence in investor sentiment. Recommendations like our recommendation on Twillo, TWLO. You can see this is a very clear-cut pattern. It's called a bobble breakout, which is a more refined J-hook pattern. The fact that they could not close below the T-line and now trading positive tells us that wave 3 could be the same potential as wave 1. Knowing what should result based upon candlestick signals and patterns allows investors to have a much more clear insight as to which price moves are going to work the best and which ones are going to be working with inordinate profitability, meaning in a very short time frame, wave 3 could move this price. That's much better than having an uptrending stock during an uptrend. That'll be it. We'll see you in the chat rooms.